detailed reports and analysis at Ellen 24/7, where the story goes, we go.
Ellen 24/7 is first of all a news station.
Well, we continue with updates from the just concluded governorship
in the southeast has raised questions if INEC will be able to conduct elections.
With a core team of over 40 correspondents spread across Nigeria.
Nigeria is set to take its place.
And affiliates in Africa, Europe, America, and Asia. We give you news as it breaks from the perspective you can trust.
Ellen 24/7 News, where the story goes, we go.
It is 16 hours from our headquarters here in Lagos. Welcome to Global Business Today. I am Yemisi Lanre-Ido. And we'll begin from South Africa, where South Africans earning less than 20,000 Rand per month are making up a disproportionately large portion of withdrawals from retirement funds, raising concerns about the long-term financial implications there. Well, according to data presented by the Financial Sector Authority, FSCA, the portion of withdrawals per annual pensionable salary category are as follows. Well, the data therefore reveals that over 65% of withdrawals come from individuals with pensionable salaries ranging between 5,000 and 20,000 Rand monthly. While this offers a short-term financial relief, it poses significant risks to their retirement security. Well, this stark contrast illustrates how financial pressures disproportionately impact lower-income earners, compelling them to tap into retirement funds to manage immediate financial challenges. Well, staying in South Africa now, Eskom has announced a significant technical breakthrough. That's a big news, enabling zero buyers with active electricity meters to update to key revision number 2 compliance beyond the original November the 24th deadline. Thanks to a new feature on Eskom's online vending system, key change tokens can now be pre-generated. This allows zero buyers to visit legal vending sites with their meter numbers to purchase electricity and receive their tokens, enabling their meters to switch to KRN2 mode. However, to activate this feature, the credit purchase must occur before November the 24th. Once activated, the final conversion process can be completed at Eskom sites, even after the deadline. Now, this update follows Eskom's earlier warnings about the consequences of missing the recording deadline on Monday. The utility urged prepaid electricity users to record their meters or risk replacement cost of up to 12,000 Rand. Now, the 6.9 million prepaid meters still using the outdated KRN1 system will no longer accept electricity tokens after that date, rendering them inoperable once existing credit runs out. Well, in Zambia, the country has suffered a nationwide power outage following a power system disturbance. The Southern African nation state utility ZESCO said the incident occurred Sunday evening, leading to loss of power supply that affected the whole country. The utility is working to resolve the unplanned outage, and power supply restoration is underway. Zambia's energy minister on Monday says some miners at 2 copper mines were rescued after being trapped underground following the nationwide power outage. And in neighboring Zimbabwe, Energy and Power Development Minister Edgar Moyo has called for urgent upgrades to the country's grid network to address the unacceptable 18% energy loss rate, significantly higher than the global benchmark of 10%. Moyo was speaking recently at the Zimbabwe-Zambia Energy Project Summit in Victoria Falls, where he outlined the government's plans to reduce energy losses by 8 percentage points, aiming for a more efficient system with losses capped at 10% by 2030. Moyo highlighted that this high energy loss rate hampers economic growth and development, stressing the need for a more efficient and modernized energy infrastructure. Now, focusing on Zimbabwe, the Minister of Energy and Power Development, Zimbabwe there, Honorable Edgar Moyo, joins me now. Many thanks for your time, Honorable. Now, how concerned are you about the future of energy supplies and ensuring they are affordable in the near future? Talking about your country.
Yes, thank you for the question. As Zimbabwe, we are very concerned about the issue of energy security, number one, and energy access to the entire population of the country. And what we are doing currently is to encourage investment by the private sector into the energy sector. For most of the time, a few years back, it has been government responsibility to ensure that energy is supplied in the whole country through a government utility. But we've now changed our regulations and opened up the sector to private players. And we are encouraging all those who would want to invest in the energy sector, and who are saying that there is a lot of opportunity in that sector because of the supply-demand gap. So the market is there, the market is mature, and we encourage people to come in and fill in that gap. And we think that is going to ensure that access to energy services in the country is going to increase. And our target is by 2030, we must have universal access to energy services in the country.
Now, your country is relying heavily on coal. What are you doing to address the emissions there?
Yes, true, coal is our dominant engine for the supply of power. But however, with the current thrust towards reducing carbon emissions and to mitigate on climate change, we are now moving towards renewables. And one of the key renewables we're looking at is solar. And we have developed government implementation guarantees to the private sector for independent power producers to come into the sector and ensure that the contribution of solar to our energy mix is enhanced. To ensure that that is catalyzed, we have asked mining companies who are consuming about up to 25% of the total energy that the country generates. We've asked them to develop solar projects and generate their own power from solar. And that is happening very well. We gave them a deadline of the end of 2025, and we are sure they are meeting that deadline.
You've talked so much about solar now. Aside solar, what other renewables in particular are you looking to boost?
Yes, hydro power has also been a dominant contributor to our energy mix, but due to climate change, we've seen receding water levels for power generation in Lake Kariba. And what we are now doing is to intensify on solar. And our solar is also on Lake Kariba, whose water is receded. And we have people that have come in to do floating solar systems on Lake Kariba.
All right, Honorable, which countries are you partnering with to meet future energy needs for your country and perhaps South Africa?
Yeah, we have already partnered with some countries, and prospects for further partnerships are very high. China is one country that we are partnering with for our future energy needs. UAE is another very big player in that area. We're also partnering with the UK government through FCDO, who are financing mini-grids and microgrids in the country for our solar energy access projects. We have many other countries that have shown interest. India, for example, they are partnering us. We also have others that have approached us that I may not name for ethical reasons before the conclusion of those discussions. But we have many countries that have shown great interest in partnering us.
Well, China is one of the countries you mentioned now, and there are concerns about your country becoming too reliant on China. Is that a worry whatsoever when it comes to energy security?
No, that shouldn't be a problem. We are working with those that would like to work with us. If China is showing a strong interest in developing energy projects in the country, we welcome them. If any other country shows interest, we don't turn anyone away. We are looking for partnerships that are going to enhance our energy security.
Well, the COP is on. What are your hopes for COP29 for Zimbabwe and the African continent in general?
Yeah, we hope that for COP29 there's going to be less rhetoric but more action. For example, commitments have been made by countries to the extent that they are going to be financing this transition from fossil fuels to renewables. But very little has happened in terms of real funding for those projects from COFAs. So we expect that COP this year is going to migrate from talk to action so that we can see real tangibles on the ground. That's our hope.
Well, talk to action. Well, the U.S. election is over and we know the president-elect. What exactly would be the impact to your country?
The U.S. is a major player in the world, a major player in politics, major player in economics, everywhere. And naturally what happens in the U.S. has an effect on how the world moves on. So we are also watching, and it is our hope that they are going to have peaceful elections, and the will of the American people is going to prevail. And whoever emerges victorious, Zimbabwe is ready to work with them.
Honorable Minister of Energy, Zimbabwe, Edgar Moyo, thank you so much for your time on Global Business today. All right, staying...
Thank you.
Thank you so much. Staying in that country still, the president on Monday hosted a conference of creditors and finance executives to discuss ambitious goals to clear debt arrears and restructure $12.7 billion in external debt with the aim to eventually tap international capital markets for the first time in more than 2 decades. Zimbabwe's debt pile accounts for 81% of gross domestic product GDP, and clearing it will be a tough challenge for a country that has faced numerous financial crises in recent decades, from repeated bouts of hyperinflation to multiple unsuccessful attempts to launch new currency regimes. Zimbabwe's President Emmerson Mnangagwa and the African Development Bank's President Akinwumi Adesina in the one-day meeting in Harare will meet along with creditors, or they met along with creditors, development groups and private sector representatives. While getting on track with bilateral creditors and clearing arrears with the AFDB, the World Bank and the European Investment Bank is necessary to unlock funding for Zimbabwe. And still on that meeting, Zimbabwe will pay $331 million to white former farmers whose land the nation seized in 2000 as a step towards getting creditors to agree to restructure the nation's debt pile, which has left it locked out of international capital markets for more than 2 decades now. AFDB President Akinwumi Adesina made this known at that conference with the nation's creditors in the capital, Harare. Zimbabwe has set aside $35 million in this year's budget to begin payments. Well, the president made it known in a 2022, where he solicited the help of Adesina and former Mozambican leader Joaquim Chissano to spearhead the talks with creditors, including the World Bank, Paris Club, European Investment Bank, and the AFDB as well. Well, in eastern Kenya, railways will resume services along the Limuru-Nairobi CBD route through Kikuyu Station this Monday evening. In an update report, Kenya Railways said the blockage on a section of the line that was caused by the siltation deposited by rainwater has been cleared. This morning, Kenya Railways announced that the train which plies the Limuru-Nairobi CBD route through the Kikuyu station will not run, that the suspension was occasioned by unavoidable circumstances. That, however, stated that the commuter trains servicing Lukenya, Syokimau, Embakasi village and Riru stations will run as per schedule. In Western Africa, Nigeria's economy grew 3.46% year-on-year in the third quarter of 2024. That's quicker than in the first 2 quarters of the year. Well, statistics shows gross domestic product, GDP growth, was driven mainly by the services sector, which contributed more than 50% to aggregate output in the July-September period. Despite the pickup in growth from 3.19% in the second quarter and 2.98% in the first, it was still short of the 6% target set by President Bola Tinubu when he took office last year in Africa's most populous nation and top oil producer. Tinubu's lightning reform push in the first weeks of his administration sparked hope that it could finally unleash the full potential of Africa's sluggish economic giant. But 18 months on, the key planks of his economic overhaul, devaluing the naira and scrapping subsidies, have triggered the worst cost of living crisis in a generation and are yet to translate into much faster growth. The National Bureau of Statistics said the services sector grew 5.19% in the third quarter, contributing 53.58% to aggregate GDP. The International Monetary Fund forecasts Nigeria's economy will grow 2.9% in 2024 and 3.2% next year. You're watching Global Business Today. We'll take a quick break and we'll be back with more. Do stay with us. Glad to have you back, everyone. This is Global Business Today. The Director of Communications and International Monetary Fund, IMF, Yuli Kozak, has disclosed that the board is set to meet early December and approve the disbursement of $360 million to Ghana at the news conference in Washington, D.C. Kozak said, and I quote, "Once the review is completed by the IMF's executive board, Ghana would have access to about $360 million in terms of disbursement." Describing the program performance as encouraging, Kozak said Ghana has followed the requirements needed for the country's debt restructuring. She pointed out that some macroeconomic projections have been achieved under the program, indicating some level of recovery. The economic growth in the first half of 2024 exceeded expectations, and the IMF's projections, inflation also declined, and the fiscal and external positions have shown marked improvement. The disbursement by the IMF board in December 2024 will bring the total funds received since Ghana signed up for the IMF program to $1.92 billion. And the IMF reaffirmed its support for Egypt's reform efforts as the country continues to navigate economic challenges exacerbated by regional tensions. Speaking in Washington there, the director, Kozak, emphasized Egypt's commitment to key reforms aimed at preserving macroeconomic stability. The IMF mission recently concluded a visit to Egypt, making significant progress on policy discussions for the fourth review of the country's 46-month loan program. Approved in 2022 and expanded to $8 billion earlier this year, the program seeks to address Egypt's economic crisis, marked by soaring inflation and foreign currency shortages. If the review is completed, it could unlock $1.2 billion in additional financing for Egypt. Well, Cyprus has said Monday it aims to join NATO's Partnership for Peace rather than remain the only EU country which does not have a cooperation program with the Western Military Alliance. Defense Minister Portis Patriou, who met with the EU's most senior military officer, General Patrick de Rosiers, said the island's geostrategic and political position contributed to the EU defense system. Cyprus was one of the founding members of the non-allied movement, but in 2004, in connection with its accession to the European Union, it left it. President Christodoulidis was elected in February 2022, advocates strengthening the island's ties with the United States. At the same time, the Cypriot authorities previously stated that there were serious obstacles to joining NATO, since Turkey would object to it, and Cyprus did not meet the conditions for NATO memberships. Well, heading into holidays, some expect to disappoint. Wall Street investors like Goldman Sachs are using new ways to monitor shoppers' action and intentions to help determine the season's winners and losers. Well, they're tapping into the quickly evolving field of alternative data to help them predict retailer performance and provide an advantage over other investors. Historically, Wall Street relied on traditional data like earnings reports and company filings with an assist from their well-seasoned gut instincts. Now they can buy intel on everything from credit card swipe data to consumer sentiment reports from an ever-growing number of providers. Founded by former Goldman partner Robert Pace in 2012, 100 partners with non-profits like Habitat for Humanity to measure thousands of individuals' future purchase intentions, claiming to get an early read on future financial trends. Over now to Italy, where the country's UniCredit launched a surprise €10 billion, that's about $11 billion bid for domestic peer Banco PM, which CEO Andrea Orcel said will take precedence over any potential move on Germany's Commerzbank. The all-share proposal, which offers a 0.5% premium for Banco BPM shareholders, follows previous aborted attempts to move on its rival rooted in Milan's wealthy Lombardy region, an area where UniCredit's presence is limited. Well, since taking the reins at UniCredit in 2021, the veteran deal maker has said it would consider external growth, but first focused on driving a near five-fold increase in UniCredit's share price. Italy's second largest bank had readied a buyout offer for Banco BPM in 2022, just before the Ukraine conflict broke out. UniCredit on Monday offered 0.175 of its common stock for each BPM share, valuing them at €6.67 each, a premium of about 0.5% to Friday's close price, to the day before BPM announced its offer this month to gain full control of Anima Holding. Well, U.S. President-elect Donald Trump's Republicans are promising to hit the gas next year when they assume full control of the U.S. Congress, with little to stop them from executing the president's promises to slash taxes and reorder the global trade landscape. But the $28 trillion Treasury debt market is flashing a red warning light against adding excessively to a debt load already expanding at a pace of $2 trillion a year. What is yet to be seen is whether these concerns will be enough to slow Republican lawmakers' ambitions or push them to find offsetting savings on a tax break agenda estimated to cost nearly $8 trillion over 10 years. While markets are betting that Trump's tax cuts and tariffs will fuel inflation as investors demand stronger returns on longer-term treasuries. Well, yields on the benchmark 10-year U.S. Treasury note have risen to 4.4%, up about 75 basis points since Trump trades began dominating Wall Street in late September. Well, that trend is driving higher interest rates for mortgages, car loans, and credit card debt, counteracting Federal Reserve rate cuts and potentially putting U.S. growth at risk. Well, oil prices steadied Monday following 6% gains last week, with mounting tensions between Western powers and major oil producers Russia and Iran, raising fears of supply disruptions and keeping a floor on the prices. Brent crude futures fell 0.34% to $74.91 a barrel Monday, while U.S. West Texas Intermediate crude futures were at $70.89 a barrel. That's down 35 cents. Both contracts last week notched their biggest weekly gains since late September after Russia fired a hypersonic missile at Ukraine in a warning to the U.S. and Britain following strikes by Kyiv on Russia using U.S. and British weapons. In addition, Iran reacted to a resolution passed by UN nuclear watchdog on Thursday by ordering measures such as activating various new and advanced centrifuges used in enriching uranium. The Iranian Foreign Ministry said Sunday that it will hold talks about its disputed nuclear program with 3 European powers on November the 29th. Markets are also expected to move this week ahead of the OPEC meeting on December the 1st, where the group may stick with deep oil cuts for longer due to weak demand. Well, the dollar retreated Monday after a stellar run as the pick for U.S. Treasury Secretary seemed to reassure the bond market about fiscal discipline, pulling yields lower and shaving some of the currency's rate advantage. Yields on 10-year Treasuries slipped to 4.343% from 4.412% late Friday as President-elect Donald Trump's choice of fund manager, Scott Bessent, was welcomed by the bond market as an old Wall Street hand and fiscal conservative. However, Bessent also openly favored a strong dollar and supported tariffs, suggesting any pullback in the currency might be fleeting. The dollar has risen for 8 consecutive weeks, with many technical indicators flashing overbought on Trump's policies, which would stoke inflation and further support the greenback. The dollar index was down 0.8% at 107.22 from its 2-year peak of 108.090 on Friday. Well, the greenback dipped 0.2% versus the Japanese yen by 154.52 and further away from its recent peak of 156.76. Well, that's how we wrap it on Global Business Today. Don't forget, you could also get more news on our social media handles and our content hub at www.ln247.news. I am Yemi Selan Redo. I'll see you again.